Hey guys, what's up? Hope you guys are having a great day today, and welcome back to the channel. My name is Matthew Spazziti here with New Millennium Wealth, and I just kind of wanted to show you guys the two different types of consolidation. So for those of you guys who are just new to trading, consolidation is when the market really doesn't have much in the way of a direction. It's kind of going sideways, not really going up or down. It's kind of being very volatile and crazy, and it's a very difficult thing to trade when you're constantly focusing on trend, but you can actually make money off of the consolidation if you have a strategy built for it. That being said, you have to understand there are two different types of consolidation, and that's what we wanted to talk about here today, or at least that's what I wanted to talk about here today. So there are two different types. The first type is structured consolidation, which I have a beautiful example here in the New Zealand yen. So I had to scroll back a little far in the charts to find this. I mean, we're still in 2020, so not too far. But as you can see, this is what I would consider to be structured consolidation. You see how pretty it is? You know, we kind of come up here, we almost touch the support level, kind of get rejected, come down here. Now we do end up breaking out a little bit here, but it's more of a false breakout. We come up here, we touch the support level again, we get rejected, we kind of go sideways a bit more, and then we come up here, we touch it again, but get rejected, come down here, find support, bounce off of it, find support, and bounce off of it again. So structured consolidation, as you can see in this chart, is when the market is bouncing between two different price levels. And there may be times when the market kind of breaks out of there and gives you a bit of a false breakout, kind of like here in the Aussie yen, where we had this big false breakout right here, but we end up continuing the upside. That's how it's a false breakout. We end up falsely breaking out to the downside, and then we end up actually breaking out to the upside. But as you can see here, again, this is what I would consider to be structure consolidation. The market is bouncing between two different price levels, and this kind of consolidation is really not too difficult to trade off of. You know, or at least I would consider structured consolidation to not be as hard to trade off of. The only problem that you have here is unless you're specifically looking for it, it would be very difficult to identify it if it was happening with live data. So like, let's assume you're off here and you're waiting. Okay, you see it, find a support level there. What you could do is you could say that if it comes up here, you know, I'm going to, you could even use your fib retracement tool. If you guys know me at all, you know I love using fib retracement tools. You could say that if it comes up here and it comes somewhere within the 80 to 90% range, which I don't have on my fib retracement tool because I don't use those ratios, but you could say if it comes up here and maybe, just maybe, it comes within this area, okay, then I'm going to short. Or maybe if it comes within this area, I'm going to go ahead and short the market. And I'm going to have placed my target either down here at the lowest close or down here at the lowest low. So that's one way that you could address it. I have no idea how consistent that is. Please do not go off and trade that strategy. If you want something like that, create a trading plan, backtest it, see what you get. But for me personally, you know, I don't trade, you know, structured consolidation or unstructured. So I don't trade either one. But as you can see, like, look, it just kind of bounces off from the two price levels and it looks beautiful. It's really, in my opinion, the most beautiful form of consolidation that we have in the markets. But this is how you identify. It's really not that difficult. It's not that complicated. It's very simple. And then, of course, we have our false breakout here, which would have caused me to measure my fib retracement tool from this structure high to this structure low and want to get involved here, which we never ended up doing, and I would have ended up losing money because of consolidation. In all honesty, my trend continuation strategy that I'm backtesting right now loses money to consolidation all the time. But this is how you identify structured consolidation. You see how we're not really making new structure highs or new structure lows. We're just kind of, you know, getting rejected and finding support on the same resistance level and the same support level. And while you may have a false breakout here from time to time, ultimately the market is respecting these two price levels. Okay, and the same can be said for here. I mean, if we're going to go ahead and we're going to you know, rewind the markets, as you can. Man, I wish you could rewind the markets. You know how amazing that would be. No, I didn't like what I did. I'm gonna rewind it and change my decision. You would never lose money. It would be awesome. So right here, we have a bit of a false breakout here down to the downside, but eventually we come up, we get rejected, we find resistance, come down. We didn't really quite find the support. We found support a little higher, but that's okay. Eventually we'll find support down there. Kind of just consolidating more in the middle of these 2 price points. And then we hit and we get rejected again off the resistance level. We finally come down, we kiss the support level, we find support, and then we just continued there. We almost get down. Yep, we kiss the support level again, find that support, and then we come up, get rejected a little bit there. Yep, still getting rejected, finding resistance, and then we finally break out to the upside. And as you can see from here, we are officially out of the consolidation area, and we are now no longer consolidating the markets. But that is one of the most beautiful forms of consolidation. Structured consolidation is. The second form of consolidation I don't like nearly as much, admittedly, is this. This is what I would classify as unstructured consolidation. Okay? This is crazy stuff. It doesn't look pretty. It doesn't look nice. But it is what it is. As you can see, the market did definitely find a support level right here, but eventually it breaks to the upside, making us think that we're going to continue to retrace and head higher. We don't. Now, granted, this whole consolidation part of the market ends up starting off because we kind of have a small bearish trend here. Actually, you know, is it small? Let's see real quick. No, it's not small. We have definitely a bearish trend that is hitting a double bottom. The double bottom is here, right here. Boom, boom, right there. I'm going to have it draw it in for you. Right there and there. Okay, so that is the double bottom. The V gets broken, and a double bottom is usually a sign of reversal. And as you can see here, we do end up reversing for a time. So we do end up reversing. So it actually does end up working out for us. It ends up making a new structure low first. And this is what gives us the unstructured consolidation that I'm highlighting here. You know, so the market comes over here, it finds support, and then it breaks higher, and then it just kind of trends, you know, it just kind of chops sideways for a while, and then ends up breaking lower after just breaking higher. So 2 conflicting signals. One signal is telling us the market intends to go higher by breaking and closing above structure. The next one is telling us that it intends to go lower by breaking and closing below structure. And then we just continue to chop sideways again, and then we break higher, and then we finally end up breaking out of the consolidation. And, you know, this is a good example, I personally believe, on unstructured consolidation. And this is the ugliest form of consolidation, right? I hate to classify them as beautiful and ugly, but in my eyes, I like seeing structured consolidation. You know, we didn't really make a new high. We found support. We found a resistance level, and then we made a new low, so we had a false breakout. But then we just continued sideways, and we ended up rallying. Here, we have a little bit of a false breakout right here, but we're just bouncing between 2 points, bouncing between 2 price levels. Here, there is no price level that we're really bouncing between, is there? We're bouncing between 2 different, I mean, I guess you could draw a line here and a line here, but there was only one bounce off of those. I wouldn't classify this as structured consolidation. I would classify this as unstructured because it's just kind of crazy. You know, we're just kind of going all over the place. So that being said, guys, as you can see, I had to actually pause the video. I actually found another version of unstructured consolidation that I think highlights what I'm trying to say a bit better. Look at this monstrosity. Unstructured, totally unstructured consolidation. I don't think there's anybody out there who would argue that this is structured. You know, first we make a new low, and then we come up and make a new high. We retrace, we make a new high again, and then we go down, we make a new low again, and then a new high again, and then we're kind of just going, chopping sideways, not really making a high or a low. We do find support on a number of occasions down here. Make a new high again right here, at least with regards to this. We don't make a new high with this one. You know, we kind of come down here, and now it appears as though we are wedging out. And you can draw in your wedge. Oh, that didn't work. And you can actually draw in your lines here, but you can see that we're kind of looking like we're creating a wedge pattern. And this indicates indecision in the market, that the market doesn't really know what it's doing, it doesn't really know what it wants to do, and that ultimately there's just nobody really knows what direction the traders and the banks, whoever's getting involved in the EuroCAD, central banks, whoever, no one has real control over this market. And this is unstructured consolidation. Okay, it's ugly, it doesn't look good, it's not bouncing between two very obvious points. It's not bouncing between two very clear price levels like we had in the other examples. This is what I would call unstructured consolidation. This is a better example than the one I showed you previously. So that's the difference between the two. You've got structured consolidation, you've got unstructured consolidation, and those are the two different types of consolidation. Now, you can trade both of them. You can definitely trade structured consolidation, as I showed you guys previously in that video. When it comes to unstructured consolidation, you can, I'm sure there's a way to trade it, but I've never really given it much thought. I would imagine that you could probably, if you see this kind of whipsawing happen, I guess you could say that I have, unfortunately, because I've seen this happen already, I have confirmation bias. I already know what's going on and what's going to happen in the future. So because of that, it's going to influence my decisions. But as a result of that, I would say that, I guess you could get long here, hoping, maybe at a 618 and maybe, place your target up here. I don't know. When you're actually in structured consolidation, I can kind of see how somebody could trade off of. Unstructured consolidation, I just don't know. Now, I'm sure there's a way. I'm absolutely sure that there is a way to trade unstructured consolidation. But seeing as which that you're kind of in the middle of all of it, when you're actually looking at it live, I honestly do not know how you would trade it. Okay, I genuinely do not know how you would honestly trade unstructured consolidation. But there are probably ways. There's ways to trade absolutely everything in the markets. That much is certain. If I know anything about trading, and I know quite a bit, there's a lot of different ways to trade the markets, a virtually unlimited number of ways. So there are ways, I'm sure, to trade this, but I don't know off the top of my head. That said, though, this is what unstructured consolidation looks like. We've already seen structured consolidation, and those are the two different types. So guys, yeah, that's pretty much it. I know that's kind of a short video, but there really isn't a whole lot to it. Unstructured and structured consolidation, those are the two different types. There is no other type. The forex market trends 30% of the time and consolidates 70% of the time. Okay, so it's really important to try to identify consolidation when it's actually happening. The problem is that when you're in the middle of it, you don't know 100% that you're in consolidation. You just don't know. Here you made a new low, new structure low, and then you made a new higher high, higher close. And so you have two very conflicting things. Maybe when you're seeing the market at this point, you're like, okay, we're in consolidation. We're consolidating now. But look at how much you had to go through before recognizing that. With this one up here, let's kind of like zoom this in. At what point, maybe you probably would have known when you're kind of doing this, okay, yeah, sure, we could very well be in consolidation at this point. So maybe you could like go long here, hope for, a retracement up here. Maybe you could, but then we create a new structure low. So that's confusing. So now we're looking for the market to continue lower. And, after, if you did a 618 fib retracement like I would have done with my trend continuation strategy, I would have gotten involved right here at the 618, and I would have placed my stop loss right here, and I would have been filled. So I actually would have made money there, but it wasn't a trending market, which is the market that my strategy really benefits off of. So right here, then we make a new high. So then, you try to get long here, and then you get stopped out because we then make a new low. So you can see how confusing and how aggravating consolidation can be. But the more charting experience that you get, the more time you spend on the charts, the more knowledge you receive from it, and the better off you and your trading are going to be. Over time, you'll be able to identify consolidation when it's actually happening real time. You'll be able to identify it much more easily than you can when you're pretty much a novice. So, it's one of those things. Make sure to understand the difference. There is structured, there's unstructured, and just make sure to know that there is a difference between the different forms of consolidation, and understand how you can identify it. All right, guys, that's going to be it for this episode. If you like the video, make sure to hit the thumbs up button, hit the subscribe button if you like what I'm doing here. Also, don't forget to hit that bell in the top right corner, so that you can get notified of anything that I post. And hey, if you know of anyone who would really find a lot of value in this, if you've got friends that are traders or interested in stuff, hey, consider sharing the show, or consider sharing the YouTube channel, consider sharing the content. And, don't just consider it. If you like it and you're getting value out of it, please share the content. Help me grow my channel. Help me grow what I'm doing here. If you like it, you're getting a lot of value out of it, let someone else get a lot of value out of it. Go share it. If you'll do that for me, not only will I be extremely appreciative of it, but if you'll do that for me, I'll see you guys in the next episode. As always, know the risks, plan accordingly, and have a great day.